Good morning. Good morning. Welcome back to another coffee hour. Just really getting started a little late here. We got a lot to cover. We're going to be talking obviously about the big elephant in the room, and that is the 90-day pause. We do have some news about NVIDIA and their chip exports, which I think is going to be a big tailwind for NVIDIA. And then we'll just talk about some other stock market news. Today was probably one of the best days in the stock market, only because we saw such a massive rally. So I'll be going over my portfolio, showing you everything that I have, as always. And then, we'll kind of just wrap it up at the very end. But real quick, before I get started, let me make sure I get this poll started. I am starting a little late here. So I apologize for this, but I got to get this poll out here. Actually, you know what? We'll skip the poll for today and we'll just roll right into it. Yeah, I had a ton of stuff I was getting through before the start of this stream, so starting a little bit on a bad leg here, but hopefully we will get through it. So boom. All right, coolio. Let me get that done. All right, cool. All right, cool. All right, let's get into it, guys. All right, so this is going to be the portfolio update. Currently, right now, still sitting at about $33,000 in annual income. April income is going to be about $3,000, and then a yield on cost, and then the dividend yield. Now, again, these numbers fluctuate because of everything that goes on. Whenever a dividend is paid out, usually the distribution rates for these cover call ETFs will change. And then in the REIT portfolio and the income portfolio, that tends to be the same, where dividends get paid out and then the yields typically drop right after the fact. But this will fluctuate from week to week, month to month as things get paid out. But I am sitting at about a $61,000 loss. It's still a $61,000 loss, which is better than a $70,000 loss, because I was deep in the red. So I am grateful to be only at a $61,000 loss. Huge rebound. I'm so grateful for that, because I'm not gonna lie, it was starting to get really spicy. So just checking the comments real fast. Hey, It's a Wealthy Life. Welcome back, man. I haven't seen you in a while, so welcome back. And I hope you're still holding Tesla. I know you are. Congratulations on that big bump. I hope you did get some shares while that stuff was down hard. Cony Finance. I hope I'm pronouncing that right. Welcome. I haven't seen you on the stream before, so welcome. Let's see. Got NVIDIA at 87, AMD at 78. What a joke. Mags, welcome back, man. Hey. Let's see, added Apple 2 at 175. Man, I'm so pissed that I could have gotten into a 3x levered semiconductor fund, which I covered on the stream before. I was in it, but then I took some profit off, and then things got really spicy, and I had to get out of it because I'm honestly going to be honest here and transparent. I was worried about getting margin called. Things were dropping so bad, so fast, so rapidly that I just could not hold on to it. And I needed to increase my margin buffer to just protect basically the portfolio from an extreme downside. So thankfully, we got a rebound. So that, gave me some wiggle room. So I ended up buying back into it. But honestly, just thinking out loud, I don't even know if I'm going to hold it long term. I kind of missed that huge opportunity purchasing it, because it went up 60%, just from yesterday. So I'm super pissed that I missed that, because I could have been sitting on like a $6,000 or $7,000 gain off of, a $10,000 investment. But it is what it is. You live and learn. There's still about 80% left to go, in my opinion, for it to come back. But again, everything is still rapidly changing. We only have a 90-day reprieve, so we'll see what comes of that, right? But yes, this is the portfolio, guys. Let me get into the news So we're going to cover the news real quick. We'll get into the markets, and then we'll wrap this up with, not only a finding that is kind of discerning, but also we'll wrap it up with a portfolio update. So Cony Finance says, I think we will drop more in the 90 days. I'm going to agree with you. I think it's going to be bumpy, but I don't know if we're going to head, even like worse than what we are like already, like, 25%. I think, like I still am of the camp that the S&P 500 will probably still reach a low of 25%, in the red. But, who am I? I'm just some YouTuber making guesses, right? All right, so let's get into this. All right, so first up, fear and greed, right? Hope you guys can see that. Again, you just want to take this with a grain of salt, but I like to just look at this. This was sitting at 3 earlier today, right? In the morning, it was sitting at 3, and it spiked up all the way to 17. So hopefully, we see greener days from here and, until the 90-day until the 90 days are over. But I really think, I don't know. This is just, again, just take everything I say with a grain of salt, but just all the news and everything I see, I think China will have to come to a deal. They're going to have to come and negotiate something, because right now they're sitting on a pretty hefty tariff from the United States. And I think this is going to cause them to have to come to the table. And this is playing into a bigger, broader strategy. And I was looking at a lot of videos from Peter Navarro. There was also one from Kevin O'Leary, famous on Shark Tank, very famous investor, and he's on record for saying, I wish, we put 400% tariffs on China. China's been screwing, American businesses for years and years and years. So, I really think that the long game is really to wrap China in, especially when you get into the geopolitics and the conflicts of everything, because you also have Taiwan that's on the table, right? Like China is ramping up to invade Taiwan. There is no doubt about that. So I think this is all playing into a bigger, broader strategy. So again, we'll see. It's kind of tinfoil hatty, but a little outside of the scope of this finance channel. So anyways, finance and greed, fear and greed, we're up 17. Markets had great days today. Thank God again. So here's the heat map. And again, I woke up this morning because I'm here in Thailand. Everything's dark, and I just looked at my phone. I just saw, XPay up 9%. I was like, holy crap. And I'm like looking at the markets and, like all this green in my face. It was pretty funny, at least, looking at it. I was super happy to wake up to that. I think a lot of us are very happy that we ended in the green. So we'll see. Wild historic day for the market sees the S&P 500 notch best day since 2008 financial crisis. It was nothing short of a historic day for the markets as U.S. President Donald Trump's pause on reciprocal tariffs against most countries except China sent Wall Street to its best day since the financial crisis of 2008. Again, waiting to see what China is going to say and how they're going to react to all of this. They have to feel salty at this point because, which is kind of crazy because the EU also announced reciprocal, countermeasures and things like that. They didn't dub it retaliatory. They just dubbed it as, countermeasures. So I think it was just a nicer word, but China was the one that ended up getting screwed the hardest, having, almost a double tariff put on them. Trump said he would issue a 90-day pause on reciprocal tariffs from more than 75 countries who had reached out to the U.S. for trade negotiations. This was a big one. Scott Besson, not too long ago, I think it was on Monday's stream that I covered this, that Scott Besson said that he was, talking with 70 countries or 50 to 70 countries. They were coming to the table. They want to talk. Right now, Japan is at the front of the line, followed by South Korea, and then you're going to have Vietnam. So all these other countries are coming to the table to trade or to negotiate better trade deals. And China just refused that. But Scott Besson said that this, going through this long list of negotiations is probably going to take them from April, May, and then possibly into June, which, kind of fits in with the whole 90-day pause. I mean, you gotta look at that stuff like that. You gotta connect the dots there. So that was crazy. He also upped the tariff rate against China to 125%. The Asian nation had earlier in the day raised its tariff rate on imports from the U.S. to 84%, while calling the American trade barriers a mistake on top of a mistake. So in the end, China is a very proud nation. We will see how this is all going to play out. This still isn't good. This is good news, for the markets and everything. But this, this trade war between China and the United States is still a big deal. It is still a big deal for a lot of companies that are in, the S&P 500 that make up, the stock market, because you still have technology sectors that rely on, chips or things like that from China, not just textiles, not just t-shirts, not just, crappy little plastic toys or anything like that. We're talking about electronics here. So there's not, and on top of that, there's also metals, right? We need metals for almost everything out here, everything in the United States, whether it's, defense, national security, creating, other or adding to electronics and things like that, that can play a part in all of this as well. So we're not out of the woods yet. We still have to wait to see what's going to come from this whole China-US trade war. Again, this happened again in 2018 to 2019. December 2018 to it settled around like April of 2019. So this happened before. And basically Trump during his first administration slapped China with all these tariffs and said, they're there to stay. And, a lot of the same news came out, fear, gloom, doom, recession, slow economic growth. This is going to rattle the global trade system, blah, blah, blah. All that same type of news came out. And then really nothing happened. The stock market recovered. Everybody was happy. Life was good, right? Life just kept moving on. Inflation didn't really spike all that high. So again, same thing, different day. Anyways, moving on. This is the biggest news of the day. Aside from, Japan stocks jumping over 8%. It was 12% or 11% earlier. So they just updated this. Trump tariffs, do not retaliate and you will be rewarded, White House says. So Scott Bessent was he took questions with, I forget her name, but the press secretary Levitt, I forget her first name. But Secretary Scott Bessent was basically saying that, this has always been about China, and he kept warning countries not to retaliate, not to do anything foolhardy, not to do anything stupid or foolish. And, basically this is the reward. They're going to have a 90-day pause. Everyone's going to be on a 10% tariff for now. And then very, very highly likely after the 90 days, if good trade agreements are reached, then those tariffs will be removed, right? And then it's a possibility that after that, the stock market could spike even more, or at least return and recover and then, continue on with making all-time highs. And this is obviously to prep not only this current administration, but, Congress for our tax bill and everything else. So all of this plays into finance. All of this plays into the stock market and why we've been in such a rut. There's a lot of, talk out there again about recessions and global trade being disrupted and, economic slowdowns, everything, right? That's just, it's the same news from 2018, the same exact news from 2018. If you go back to 2018, and if you start around, I think like October or August timeframe, and you just read stock market news, it was the same exact stuff. And I covered some of the articles in an earlier stream. I don't have those articles right now, but if you look back in the earlier streams, you'll see that it was the same kind of news. And it's, again, it's always the same stuff, different day. So Goldman Sachs actually reversed. I got this ad right here. Actually changed course on their recession odds. So they decreased it from 60% to 45%. Speaking of recession news, right? So this is they're calling it a hike in a week, but really, I mean, it's I don't know. I want to take this with a grain of salt, honestly, because for them to change their projections this quickly on a dime, again, it kind of makes them, you kind of just look at it and just be like, another change within a day, right? Like it's nothing new. So April 7th, Goldman Sachs raised the odds of a U.S. recession to 45% from 35%. The second time is increased its forecast in a week. Okay, maybe I got them mixed up. Maybe I got Goldman Sachs mixed up with somebody else, because I swear I saw an article saying that they were going with a 60% chance. So maybe I got my articles mixed up here. Goldman raised its estimate from 20% to 35% early last week on fears that the U.S. President Donald Trump's planned tariffs would roil the global economy. Days later, Trump's announced deeper than expected duties, which have ignited a sell-off in the global markets. So, stock markets everywhere basically was selling off. You had the Nikkei that was going down. You had China's stock market going down. You had Europe going down. You had India going down. You had everybody just going down. But looks like, they're going to be seeing a lot greener days coming this week. Man, these freaking ads are huge. Yeah, I got to get a VPN or something. So anyways, White House steps back from potential export curbs on NVIDIA's H20 chips. So you guys know that I am really bullish on NVIDIA. I do hold a sizable position in a income-focused ETF that covers or has single stock exposure to NVIDIA, and that holding is NVW from Roundhill. It is part of their weekly pay series. The Trump administration is apparently pausing the implementation of export ban to China for NVIDIA's H20 graphics processing units, according to a report by NPR. Now, the H20s, just really at a high level, they're just cheaper versions of the Blackwell, right? The Blackwell is the premier chip from NVIDIA. And this Blackwell is supposed to be, a lot more powerful, able to train AI agents a lot quicker. And China made this white paper basically saying that they can have the same type of AI training models, or able to create AIs at a cheaper fraction of the cost using older chips. So they were really relying on this H20 graphics processing unit, GPU, from NVIDIA. So there was all this talk that, China, there's a couple companies out there, Alibaba is one of them, and they were basically purchasing, they had a bulk purchase for H20 chips. So that was, kind of left in the air if they were going to get banned or not. But it looks like, it is going to go through. So this is a huge tailwind for NVIDIA. It's just going to add extra dollars onto their revenues. So the H20 is the most advanced chip offered by NVIDIA that is still allowed to be exported to China. Industry observers and Chinese tech companies had expected the H20 to be added to the list of other banned hardware. Alibaba, Tencent, and ByteDance placed at least a $16 billion, see, it was $14 billion last time, placed at least $16 billion in orders for NVIDIA's H20 server chips in the first 3 months of 2025, ahead of a potential U.S. ban on the sale of AI chips to China. The H20 chips are slower in performance than NVIDIA's new Blackwell chips, which the company sells in most markets outside of China. The change of heart by the White House came after NVIDIA CEO Jensen Huang attended the $1 million per head dinner at Mar-a-Lago last week, according to the report by NPR. NVIDIA allegedly said it would make new investments in U.S.-based AI data centers. So CoreWeave, which just made its IPO not too long ago, CoreWeave is a piece of that. CoreWeave is basically a data center that has nothing but GPUs. They don't really have the whole CPU stuff, like traditional data centers would. So CoreWeave's whole shtick, before they became CoreWeave, they were an Ethereum mining company, and then they switched over to now they're an AI centric data center. So they're going to be useful for adding that compute, adding that power, adding that extra processing power to train AIs. So that was the whole thing for CoreWeave, but that company is really mired in a lot of bad press, but they are backed by NVIDIA. NVIDIA is backing them. They did add, and I mean NVIDIA did purchase a sizable amount of shares in CoreWeave. And not only that, CoreWeave actually has about a $12 billion contract with OpenAI. So OpenAI, again, they're doing this whole Stargate project. They have a data center coming online in Texas, I think this summer, and then they have another data center that they're trying to get online later in September of this year. So that'll be two, AI-focused data centers. And I believe CoreWeave is going to have a piece in both of those data centers. So left to be seen. I haven't seen any news about that, like specific about those specifics. But, CoreWeave whole point in this partnership is to provide the infrastructure, to provide the backbone for training AI models and, AI processing, and all that other stuff. So again, really bullish on NVIDIA. I really think this is a good tailwind for them. If they can continue, exporting chips to China, that'll be a big tailwind for them. The biggest thing here, again, is geopolitics. Trump, the United States wants to try to limit China's ability to create advanced AI models. So, they're going to try to stop them any way they can. So selling them second rate or almost second-handed, GPUs is probably the next best thing. But, again, I wouldn't put it past China that they're trying to find other ways to get a hold of, better chips. You do have Huawei. There's Huawei out there, and there's another company out there. I think it was Alibaba. I could be wrong, but there's Huawei out there, and they have they're trying to come up with their own AI processing units, their own GPUs, their own AI specific chips to compete with NVIDIA. But again, I can't see it. NVIDIA just has such a large ecosystem of not only software, but a large ecosystem of hardware. And it's just, they built all of this in mind for specifically for artificial intelligence. So again, I think they're years and years behind NVIDIA, but again, who knows? We'll find out here in the future if they can really actually compete. So that was that for NVIDIA. Again, very bullish on NVIDIA, and I really think this is going to be a good tailwind for them, at least over the next 90 days. Of course, all of this can change. United States, the White House can just say, hey, we're stopping all chip exports to China, and then that will probably be a huge headwind for NVIDIA. So let me just check. Okay. So It's a Wealthy Life says 3x levered. Yikes. Yeah, you have to protect yourself. Yeah, exactly. I mean, that was kind of the point of getting out of it, and now I got back in it. Kind of a stupid move in my opinion, thinking out loud. Oh, okay. Well, congratulations on that vacation, man. You definitely deserved. Any vacation is definitely deserved and well deserved. All right, so getting into the markets. Okay, so we have the S&P 500 closing today at 9.52% in the green. All right, huge day for the S&P 500. I've never seen a spike like this. Never ever in my lifetime. They say this was the best day since 2008. 2009 recession, GFC, the Great Financial Crisis. I have never seen something like this because I wasn't investing at that time. I think I was like 18 years old or something, and I didn't even know what a stock was. So this is a huge deal. I always said that if you see an index move 1% in either direction, that could either be a really good day or a really bad day. So seeing 9.5% is a massive day. So really good, and I'm happy to see that. I'm sure you guys are as well. So yeah, it's absolutely crazy. So Certified says, I am here. Well, welcome, sir. Welcome back. Income Baron, crazy day. Hey, man, welcome. And It's a Wealthy Life says, dude, I think I made $85,000 today. God damn. Man. Well, congratulations to you, man. Damn, 85,000. Let me hold a little bit. Let me hold a stack. NASDAQ, we are up 12% for the day. All right, the tech-heavy, tech-focused ETF, or the tech-focused NASDAQ 100 of 100 companies versus the S&P's 500. So this was also really good. I am a holder of VGT, which is a tech-focused ETF, and that was up about 13.5% today. So again, big freaking deal, because that was my biggest loser so far, because I bought at an all-time high and then it just started dipping. It was down close to like 28%. So I was down about $46,000 just on that ETF alone. So that was scary. I'm not going to lie. That was scary. Bitcoin had a huge rally, which I was like, I don't know, like, again, shout out to anyone holding msty, the yieldmax ETF msty, or anyone holding MSTR, anything related to MSTR. You guys survived another freaking day, because there was a lot of doom and gloom out there. I mean, you guys can see it for yourself. A lot of fear, a lot of doubt. At one point, down to $75,000, right? Zoom out a little bit. I think it was, no, yeah, that was about $75,000. So again, I tip my hat to you guys to be able to hold on like you are for dear life. That is just crazy. So yep, Bitcoin had a huge rally up to $82,000. It was at 85 just a second ago. It looks like I refreshed and it just dropped. So either way, congratulations to people who are holding and continuing to hold. All right, gold. Oh wait, what happened here? Oh, that's why. Price. There we go. Still the best performing asset year to date, up 16%. They did have a sell-off over the last couple of days, which again was kind of surprising. I'm guessing because we had a huge bump in the market that gold actually tried to flock into equities, but then we found out that later that no, that was a rumor. The White House was not pausing for 90 days. And then, gold started to go back up. So I think people were moving back, and then the whole recession fears and everything else, et cetera, et cetera. But it looks like gold is still continuing to climb. It seems that there's still fears of a recession on the horizon, which, could possibly be true. Jamie Dimon, the CEO of JP Morgan Chase, he just did a interview. I wish I could cover it, but I didn't watch the video, so I don't want to talk about, something I didn't watch. But I saw, just the highlights. Basically, Jamie Dimon is saying that, yes, there is a possibility of a recession in the future if this whole tariff stuff doesn't come down. So I'm going to watch that video, and I definitely want to do kind of like a video on that, because Jamie Dimon is a very intelligent person. I like to watch whenever he does his interviews. I like to watch it. When he was doing his Senate hearings or whatever, very intelligent guy, just a very intelligent person, very in tune with the market. So I like to hear what he always has to say. Not that I'm going to just sell everything just because he says, oh, there's a recession on the horizon. I'm not going to just sell everything, but again, it is not a bad idea to listen to what other people have to say, so then you can position yourself, accordingly, right? Position your portfolio accordingly. Of course, black swan events, they can happen at a moment's notice. The funny thing about all of this, about this huge downturn that we've gone through, is that we had advance notice about a lot of this. There was so much advance notice. Of course, everything is hindsight 2020, but we had so much advance notice about what was going to happen. We just didn't know how the markets were going to react. And that was, again, I've never been through, a tariff war with the world. So this is just good experience for the pocketbook or for the back pocket, in case we come up on this again, then I'd be like, oh, well, lived through this before, so I know to probably flock to gold or something. So anyways, 10-year treasury, this, in my opinion, is going to be the bigger story here. The 10-year treasury spiked like crazy. All right. It went down from 3.9%, and it spiked as high as, what was it? Like almost 4.5%. If this doesn't come down, this is a problem. This is going to be the bigger problem, because it's not just real estate, right? We use the 10 years kind of a weather gauge for mortgage rates and things like that, but it's not just mortgage rates for real estate. It's also for businesses. It's also an indicator for the economy, right? If this does not come down, and if this does not come down to reasonable levels, probably in the 2.5% range, in my opinion, because if we just look at like this is the line we want to, well, not this line. Let's see, from 2008. So this is when 2008 GFC happened, right? Boom, went down dramatically, and it stayed low. It stayed below the 2% range once the markets recovered, right? Federal Reserve lowered all the interest rates. We're in this insane bull market, or we started getting into this bull market, but it's been that low. If you look even further back, 1981, 1980s, look how high the treasury was. All right. Periods of high inflation, economic doom and gloom, all that stuff. So we have to get back to these levels, below 2.5% to 3% is probably the better range. So we've been elevated for quite some time, and Trump well, not Trump, but Scott Bessent, Secretary of Treasury, again, yeah, I always say this, but he's on record for saying that him and the Trump administration is focused on bringing this down. And again, there is a prevailing theory out there that, the whole reason for this tariff stuff is to basically force the Fed to lower interest rates, which it won't cause the 10-year to go down, but, having investors, probably rotate out of or rotate into treasuries is probably what's going to cause this to go down. So more to be seen. Again, I'm keeping an eye on this. This is probably the bigger story that we have to see. This has to come down. If this doesn't come down, if this stays elevated for longer periods of time, this is what's going to contribute to an economic slowdown. This is what's going to contribute to, a recession. So more to be seen on this. VNQ real estate index. Again, we just use this as a barometer for the REIT market. This was up almost 6%, which is huge, absolutely huge. Never seen a jump or a spike this big for REITs as long as I've been investing in REITs. So this was a welcome change because we were on a downward trend for quite a while. So good to see. My REITs, I was in the green for quite a while. Because REITs looked like they were starting to rebound and starting to recover. And then, of course, just recently we just started hitting started heading south. So it is nice to see this. So going to check the comments real quick. We'll hop into portfolio updates. And then I want to cover just something I thought was rather interesting and something for other investors to keep in mind whenever they're investing in, cover call ETFs, because not every cover call ETF is the same. And it's really dependent on the fund managers and the people running these cover call ETFs. So let's see, starting with income bearer, my margin account went up 25% today. Man, that is awesome. Yeah, my margin account was starting to get spicy, man. I gotta tell you, like mine was getting spicy. I was like, man, this is gonna be wild if I get a margin call. Let's see. It's a Wealthy Life says, I've never seen a 12% move in the QQQ. Neither have I. Like, not as long as I've been investing. I've saw maybe a 1%, 2%, even a 2.5% on a normal day. 3% is kind of out there. Those don't really happen all that much. But to see, a 12% move, that is absolutely crazy. That is absolutely crazy. The markets were way oversold. This is normal. Lots of shorts probably covered with this move. There was, when I was looking at purchasing something yesterday, I was like, man, this is at not only at a 52-week low, but this is at like a multi-year low. Like I really should buy this thing. And it's Soxel, right? It's the 3x levered semiconductor fund. And I was like, I should buy this thing. I had that price at like $7 and 80 something cents. And I'm just like, no, it's gonna go a little lower. It reached about $6.49 at one point, like just wait for it to go lower. And that was a mistake on my part. But I missed the opportunity, is what it is. Let's see. Galveston, hey, welcome back, man. Downturns like this, was really glad to have cash on hand. Everything I liked was on sale. Man, this is like, I love that. I love that. That is the mindset that a lot of people need to have. I mean, myself included. Fear did grip me a little bit. Well, a lot. I'm not going to lie. But having that extra cash on hand, that dry gunpowder, was perfect for this time. It's a Wealthy Life, and you, Galveston County, you guys know that we have a mutual YouTube acquaintance that has said that, to be cash heavy, right? To be cash heavy. You guys know who I'm talking about. Shout out to RCE. But he was, always saying you need to be cash heavy. Donald Trump is going to freaking destroy the markets. He's going to take this country into the shithole before we see better days. He called this months and months ago. He wasn't talking about the stock market at this time or anything like that. He's not a finance channel, but he was talking about this, and it's so funny to see how all of this played out. And he called this 100% right, like back in November, that we were going to see some type of huge drastic change and to be cash heavy. So shout out to everybody who was cash heavy at this time and purchased everything that was on sale. Of course, we can go lower. There's always that possibility. I still am of the camp that we can probably hit a low of negative 25% for the S&P 500. I'm still in that camp. You know, I'm like cautiously optimistic, but we will see. We'll see how these next couple of days turn out. Eyeballing a few more things. Hell yeah. Like investors who take advantage of this downturn will not be unhappy in the next year. All right. I will say that out loud. I think a lot of investors, you know, watching this, you know, you guys in the chat, you guys know this for a fact. Just being a good student of history, you know that the markets recover, and that usually after every, you know, large downturn is followed by massive upside, whatever that could be, right? In 2020 during the Rona, you know, you had a market decline of about 30%, and we saw gains over the next year or two about, you know, worth upwards of 100%. So, you know, just on the recovery was 30%, you know, and then whatever that gain was after that fact. So imagine if you were purchasing, dollar cost averaging, lump sum investing during that downturn, how much money you came out ahead. I know I came out ahead because I was able to use a lot of that money and then purchased a piece of real estate with that. Wealthy Life says, I was tempted to short the VIX yesterday. Pissed I did not take the trade. I had the ticker up. Sorry you missed the opportunity. Welcome to the club. James says, my plan for margin, Jenga backfired during this trade war, so many of my 25% maintenance holdings went up to 45, 60%. Glad I only went into margin on a few $100. That is a great point. That is a great point. I don't think a lot of channels cover, and I've been meaning to talk about that. But yeah, even in like even on Robinhood, I saw a lot of the, you know, bigger name ETFs, cover call ETFs go up from 25% to 45% and even as high as 65%. So, you know, there is that risk out there. There is that danger during market volatility that maintenance requirements will change for margin. So to anyone who's using margin out there or thinking about using margin out there, just know that maintenance requirements, they do fluctuate. They can change based on market volatility. And this was definitely one of the bigger times when market volatility was at all-time highs. So definitely keep that in the back of your mind whenever you're deciding to use margin. If you decide to use margin, be very careful with it. It is a loaded gun. Let's see. Wealthy Life says, I've been saying this for months. That's why I sold off Palantir at 111, redeploying that cash at these lows. Man, that's played it like a fiddle. Played it like a fiddle. Citizen of the Year says, disappointed in the market manipulation today. Yeah, you know, it's crazy because like, I don't follow, like, I'm not on Truth Social, but if you want the best, like, up-to-date news on Donald Trump, like, just look at his account, right? And not too long ago, like, I looked at this right before I went to bed, and he was like, oh, you know, buy now. Now's an opportunity. And I just kind of looked at that. I'm like, man, this dude's just riling everyone up, trying to rally the troops, you know, say, oh, don't worry, guys, we're going to get through this. And then I wake up and he put a 90-day pause on everything. The manipulation is freaking crazy. It is absolutely crazy. And then not too long ago, you know, you had Bill Ackman that was saying we need to put a 90-day pause on things, right? And then he got kind of into like a little bit of a spat with everyone else. And because there's so many other billionaires that were like, yeah, we need to like halt these tariffs. These tariffs are stupid. They're destroying the economy. You know, you can look at it two ways. Either the administration has the greatest negotiator in the world, you know, the whole art of the deal, all that kind of stuff, or pressured by basically all of his financial backers and basically all these market movers saying, chill the hell out, put a 90-day pause on, let things come back up. Let us, you know, exit some of our positions and not get margin called. You know, there was some chatter that a lot of hedge funds were getting margin called. I don't know, guys. You guys tell me. You know, there is some tinfoil hatted stuff out there, and you know, I'm all for it. Some of it does make sense. Galveston says, let's see. The newer investors here in going through sell-offs like this teaches them not to get nervous when markets dump. You know, so I'm in a few other discords, and it's crazy that when the market's at our all-time highs, like everybody's euphoric, right? And everybody's like, oh, when there's like a small little drop, and I'm talking like, you know, maybe like I don't know, 5% drop or something, you know, across asset classes or across ETFs and things like that. People are like, oh, blood in the streets, buy, buy, buy. But when there's a 20% drop or a 25% drop, people are like, I don't want to buy yet. Like, no, the market's too crazy. These things can go to zero. Stay away. don't buy anything. I'm not buying anything. I'm going to wait for a recovery. Like, it's funny to see that in real time because everyone will spout all these Warren Buffett quotes, all these platitudes. And then when it actually happens to them, they sit on the sidelines, like it's funny to see that. And again, I'm not free from that either, cause I got in Soxel at a great price at $8.30 or something now. Or when I first got into it, and I sold it at a gain, and then it dropped even further, and I didn't want to buy back in because I was scared it was going to go even lower. And topple that with or put on top of that, margin and getting margin called, and it just adds to the fear and the anxiety. So stayed away from it, but again, lesson learned. So yeah, get greedy, too greedy when we're at all-time lows. Absolutely. I have to hold myself back on the buys because I always want dry powder. Yeah, like having dry gunpowder is always a blessing, I suppose. It is always nice to have. So congratulations to all the investors who held. All right, so let's get into some quick portfolio stuff. So you guys already know that one of my biggest holdings is xdte, right? Let me see if so you guys don't have to squint your eyes there. All right, so you guys know that one of my biggest holdings is xdte and xpay. All right, these are basically two cover call type ETFs for the S&P 500. Although xdte, they do use synthetics, xpay uses something completely different. You see these recoveries completely different. The S&P 500 is up about 9.5%. xpay only recovered 8.9%, right? So that kind of makes you go, right? Whereas xdte is like this is so disappointing to see xdte only recover close to 4%. That is a little bit discerning, right? Because usually xdte, excuse me, has been trading almost 1-for-1 with the S&P 500, right? Whenever there was a gain for xdte. Whenever there was a loss for the S&P, there was almost a similar loss for xdte. But this recovery really kind of opened my eyes. I was like, holy crap, like this really sucks. When you compare that with other funds out there, right? So we have from yieldmax SDTY. So this is a similar, cover call ETF, but this one recovered 10.7%, 10.7%, right? Similar call strategy, 0 DTE, 0 day to expiry cover call strategy. This recovered way more than what the actual index, what the underlying index had. And then obviously almost triple, close to triple of what xdte recovered. So that was kind of a surprise. Obviously someone at yieldmax, whoever the fund manager is, did really well there. They probably got a huge payout. For NEOS, the S&P 500 high income ETF, which is completely different than the other two, but I just wanted to put this out there because I know smci is a very popular ETF for a lot of income investors. This one only underperformed by about a percentage point from the S&P 500, right? But you're still getting, a higher yield, a higher distribution rate. But seeing this recovery and then comparing this with xdte, again, a little discerning, right? Kind of a shitty thing to happen. I'm still a believer in roundhill. I'm not going to sell out of this because of this lackluster performance. But I will say that, if something like this was to continue, to recovery, then, I don't know. I'm not going to say I'm going to sell out of it, but it is just really discerning. Again, I don't expect xdte to recover past, 50, was it $50? Maybe it'll get as high as $52 because that's what it's usually been, historically. If you look at the performance of xdte, it's usually hovered between, $50 and $52, right? Even though the market was going high. I don't know if that's the reason why this did not recover as much. But if it gets back to $50, I'll still be happy with it. I would still be happy with xdte if it at least recovers to $55, because I think my cost basis is about 47 and change on this. So, the other big holding, xpay, you guys already know what xpay is. It's a target 20 distribution rate, so it targets about 20% distribution every month, which it is pretty nice. That did recover very well. NVW, which is a NVIDIA weekly pay ETF from Roundhill. This recovered very nicely. Again, this is a 1-2x levered product. So you're getting 120% plus income. So hopefully we maintain this good week. Hopefully we end in the green or even more green, because I would predict that the payout for NVW and PLTW is going to be very, very high. You know, PLTW's current distribution rate, according to Roundhill, is about 90%. And that's finally with, you know, a couple of weeks worth of data behind it, you know, distribution rates. NVIDIA is about 25%. Again, these will change because as, you know, the weeks go on, depending on how these pay out and depending on the performance of the underlier, those payments will change and will fluctuate. So you got to take that distribution rate, that 90% distribution rate, with a, you know, a grain of salt. And then finally, you know, Ondas, again, just kind of a meme stock I'm holding. You know, I have 1,000 shares. So for every dollar it goes up, you know, I'll make, you know, $1, I guess, on every share. So, you know, waiting for this. This will be like a multi-year play. I don't know when I will exit this. Again, there's only $1,000 in this thing. You know, I also reopened that position in Soxel. Probably a stupid thing to do. I don't know. I'm going to hold this and see what happens to it. I'm probably going to hold it for at least a month. But if we start heading back down, if we start heading really, really south again, I will have to pull out of Soxel. I might even just pull out of it sooner rather than later, to be honest, because again, I want to probably hold on to the dry gunpowder for something else. But I really like this damn fund. I don't know. I got like a really bad relationship with this fund. This fund has burned me a couple of times, but I keep buying into it. Like, I cannot stop. I think the upside for Soxel is really, really good. And I'll show you why. So if we look at Soxel, whoops, no, not Solana. There we go. All right. I think the upside is there, right? So this has reached, if we look at a 5-year period, this has reached as high as, you know, almost $64, right? So we're still down about 80%. So I think there's still a lot of upside. Now, I don't know if I'll hold this thing long term. You know, I'm talking like decades. I mean, I just don't see myself holding it that long. But I will hold it and then get out at a gain of some sort. You know, it would be nice to at least make my money. So if I could make at least, you know, I don't know, $10,000 on the shares that I own, that would be nice. I don't know if I'd sell out of it at that point, but you know, the upside potential is there. Semiconductors are not going away. They're not going anywhere. And if anything, they're just going to become more useful in the future as, you know, not just artificial intelligence, but just as everyday devices are used more. You know, phones, you still have healthcare, you still have robotics, you still have cars, you still have everything, right? And semiconductors play a part in all of this. So still very bullish on semiconductor industry as a whole. So the biggest holding in Soxel is Broadcom, a ticker AVGO. So this really moves very close with, well, recently, I won't say always, but recently it's been moving really close with AVGO. So I just kind of look at AVGO and then kind of just see how Soxel is doing, right? But yeah, that'll do it for the Robinhood portfolio. We'll take a look at the M1 Finance portfolio. And then I'm going to share some thoughts on that as well. Real quick, let's see. Galveston County says, what doesn't kill us makes us stronger. That's 100% there. We are calmer when the rest of the world's on fire and the markets are dumping. Yeah. I didn't sell anything aside from the Soxel stuff. Aside from that, I didn't sell out of NVW. I didn't sell out of PLTW. I didn't sell out of anything. As a matter of fact, I was probably a net buyer of stuff while this downturn was happening. Now, I'm not fully recovered, obviously. Like if I pull up the Robinhood account, I still have a ways to go for a full recovery. I think a lot of us do. Depending on when you purchased. Let's see, today's return. Let's see, total return. Boom. So you guys can see I'm still down quite a bit. I'm down 9,000 on xdte, down 7,000 on xpay, down 1,000. Oh wow, 1,300 on NVW, and then only down. Well, it looks like I'm in the green for PLTW. Man, I should just take that profit right now. Take that $167. But no, I'm gonna hold on to this. I'm gonna hold on to these, of course, for a while. And I'm only down $263 on Ondas. So Ondas, again, for those who don't know, is comprised of two companies: OAS, Ondas Automated Systems, and then the other one is Ondas Networks, which is used nationwide for wireless connectivity for mission critical infrastructure. Ondas Automated Systems is more of that security defense sector focus. They're with drone technology, so they have some cool drone stuff that does, like they have drones that can do like automated security or defense, monitoring, that type of stuff, surveillance. But they also have, a package where these drones, if they see drones incoming, these drones can capture those drones. Like, it's all automated. Really cool. But again, I don't see like on the battlefield, I don't see practical use there. Cause I mean, you're going to have boxes of these things set across a battlefield. Right. So I don't know, maybe it might be worthwhile. I have no idea. But also for Ondas Automated Systems, they have a partnership with Palantir. But again, like that partnership, I don't know, it doesn't yell or scream anything to me that it's worth it. Like you have smci Supermicro that's in a partnership with nvda, and I really think that is the only thing propping that company up. If they didn't have that partnership, smci would not, like, their share price would not be as high as it is today at all, like really at all. But again, I digress. But yes, they have a partnership with Palantir, Ondas does. And really the only difference is, it's just an Android phone that can use, Microsoft Word, right? Or Safari. It's just their hardware is integrated with Palantir. Their drones are integrated with Palantir. So, again, nothing too sexy there, but, it's worth holding. Maybe something will change in the long term. Oh, looks like I got timed out here. So I got to log back into my M1 Finance portfolio. Oh, that would be so crazy if I typed that into the chat. All right, come on. Okay, hope you guys can see that. Let me make it a little bigger. All right, so portfolio had a huge jump. Thankfully, all right. Thankfully, I had a huge jump. I was down $48,000 on this ETF alone, and it looks like it had a really big recovery. Again, thankfully, I'm back up to about 13, or recovered about 13.5% for VGT. So again, I was heading towards the 30s, right? Like probably the mid 30s for this one, into the negative mid 30s for this one. So I'm just happy to freaking get half or some of my money back from all of that. I bought in at all-time highs, and then the market crashed, right? The market started trending downwards. So VGT has been like the biggest holding I have that's been hit the hardest. But again, it's an ETF, right? It's an ETF that holds a basket of like 300 different companies. So I'm not too worried about there. There's a lot of exposure to the Mag 7 in this ETF. But again, I bought it as kind of a passive, blase blah type of investment. I don't have to manage it. I don't have to keep looking at it. Yes, there's a market downturn. Yes, this thing did drop 30%. It does, kind of make you a little worried. But I mean, if you've been through a market downturn, i.e. the Rona, 2020, where your market declines were as high as, 30%, then this is kind of like a walk in the park. The only thing that really makes you sweat, like if you're, like in Robinhood, is if you're leveraged to the tits, right? If you're leveraged to the tits there, it just makes you sweat a little bit more. But, sweating is good for you. Anyways, REITs, we had a huge recovery, thankfully, huge recovery. Again, there's still a lot of opportunities, in my opinion, in the REIT market. I want to just cover a quick segment on REITs. There is opportunity here, but again, there's still a lot of headwind. The headwind is recession fears. If a recession does happen, all these sectors are going to be prone to some type of cascading effect from that. Okay. You have cell tower REITs. These are, towers that just lease out space for cells, right? For cell towers, or excuse me, cellular equipment. So think like T-Mobile as one of them, right? That is actually one of their customers. But AMT, I always forget to check this, but I believe AMT has exposure to data centers now. So that is a good thing for them, for at least for that company. CCI, they just fired a bunch of their C-suite executives. So they're bringing in new people. They got rid of their fiber segment in their business. So they're going back to their roots of, cell towers. And they're probably their biggest niche in cell towers is the smaller packaged cellular equipment that they have in like denser populated areas. So think like New York City, a San Francisco, or even a Miami, where you're not going to just have a cell tower in the middle of the city. So what they have are these smaller units that they lease out to other companies. So I think CCI is going to have a nice rebound again, but the headwinds are there, right? The headwinds are there. If we go into a recession, a lot of these sectors are going to feel the pain. For sure, apartments will, right? Recession, unemployment, that kind of stuff. If people can't pay their rent, apartments will suffer. But the tailwind right now for apartment REITs is the fact that building new apartments, building new housing is not exactly cheap right now. The cost of goods and services to build those houses, get the wood, get the steel, get the wiring, get the plumbing, all that stuff is very expensive right now. So, existing apartments are killing it right now. Existing inventory is killing it right now. There was a worry that there was too much supply, from all the building in 2020 and 2021, because of low interest rates. All these new buildings were being built and developed, and they finally came online in the last year and a half. So that got absorbed into the economy, got absorbed into the markets. But now there's still a housing shortage. So if home builders can't build anything, apartment, builders can't build anything, then apartment REITs have a huge tailwind, right? This will be a huge boost this year. But again, that recession fear is still there, and that's how it'll affect apartment REITs. Industrial REITs, probably the biggest of the bunch that's been affected. PLD, I covered this in Monday stream, but Prologis is one of my bigger holdings in the industrial REIT space, and they're being hit the hardest. Right, they have kind of an occupancy issue. If the cost of goods and services go up, people are not going to buy stuff. Prologis, they make a lot of their bread and butter from warehouses. So think of like Amazon, right? Amazon needs these large warehouses in order to basically store their stuff and then ship it to customers. Well, if people can't buy stuff, or if stuff is too expensive now with, 104% tariff on things, well, people are not going to be buying it. So that space is going to become empty, right? Just nobody's buying it. No one wants inventory sitting. So there is a lot of headwind for PLD, for Prologis. But again, I am of the belief and of the camp that Prologis is a very responsible company. They have an excellent management team. This isn't the first rodeo they've been through where, they're going to have a lot of challenges. Plus we still have the interest rate that is a headwind right now. So if we can get that interest rate down, a lot of these REITs will pop. Prologis is going to be one of them. If we can get past this whole tariff situation, Prologis is going to have a huge rebound. Prologis has always been a very expensive REIT. I think right now it is a great time to buy Prologis. Just my opinion, of course, do your own due diligence. I'm not a financial analyst, etc. All right. Storage REITs, you guys know what this is, self-storage. I think this would be good if a recession happens. If a recession happens, this would be a tailwind for storage. So I'm in a couple different storage REITs, Public Storage, Extra Space, and CubeSmart. Excuse me. Public Storage is the biggest one of the bunch, right? They actually, if you look at Public Storage, they've trounced the S&P 500 over decades. Like they've outperformed the S&P on multiple bases, right? It's a combination of their share price and the dividend reinvestment, right? Or the dividend that they pay out. But when a recession hits, people downsize, right? People downsize, they go to smaller houses, smaller apartments, things like that, but they still want to keep their stuff. Humans, they don't like throwing stuff away. So what do? They go to public storage, they go to self-storage, right? They store a bunch of their crap there. So, if a recession happens, I really think PSA will be just fine. Okay. So I'm not too worried about that sector all that much. Triple net lease. This one is companies that lease out space to retail. So think like, I won't say McDonald's because they own a lot of their own stuff, but I'll say, let's say like a Texas Roadhouse or maybe Dollar General or Dollar Tree, things like that. They lease out this space to them. Now, if a recession happens, that would obviously be a tailwind for Dollar General, for, Dollar Tree, and those really like, kind of those retail stores that follow that kind of model. That'd be a tailwind for them. But if these tariffs stay up and it impacts a lot of these retail companies that have spaces in O, in ADC, in triple N, and they have to, like, they're not going to close their lease, because the way triple N works is when you sign an agreement with a triple net lease company, like that agreement is good for years, sometimes decades. So they can't just get out of it unless they want to pay some huge penalties. So I think that is like some protection for these companies. But also, if a recession happens, during the last recession, during the GFC, you still had a lot of retail that went out of business. A lot of companies closed up shops, like Papa John closed, like hundreds and hundreds of shops. Or maybe it wasn't Papa John's, it was someone else. But there's tons of these businesses that end up closing their doors, right? Or closing stores across the nation. So when that starts happening, that's when these companies, these triple net lease REITs, would probably feel that pinch. But again, they have a lot of protections from the contracts that they sign. But even if we hit a recession, I don't think that will protect them. They won't be shielded from that if like Dollar Trees and Dollar Generals go out of business. Because Dollar Tree, Dollar General, if you look at their stock price, they've been on a steady decline. So they're hanging on by a thread, and they're probably not that far off from bankruptcy, in all honesty. And Walgreens is another big client of Realty Income. I forget how much exposure they have to them, but Walgreens was in the news not too long ago, and there's talks of them probably closing down hundreds and hundreds of stores. So that would affect, obviously, Realty Income. So manufactured housing, mobile home parks, I think this would actually do well in a recession. I'm not worried about mobile home parks. Again, people downsize, so they're going to go to cheaper areas. And mobile home parks are kind of a unique asset class. Strip center REITs, similar to triple net, but they just own kind of like combinations of like retail plus apartments. So think like, Cineplexes, Whole Foods, grocery anchored type of places with a lot of retail, with a lot of like restaurants and things like that. These would obviously be affected because people are spending less. Biotech labs, these are office REITs. So casino gambling would also be affected during a recession. And then, single family homes, again, they still have a lot of tailwinds. Same with multifamily apartments. Cannabis REIT, I don't even know anymore. I was up 100% on the cannabis REIT, but now it's on a downward trend. So I just wanted to cover the REIT portfolio because, there is a lot of interest in REITs, but I want people to at least understand that there is risks with these REITs. They're not safe from everything, right? They're not shielded from everything. I still am in the camp and of the belief that REITs will have a rebound year this year. Just got to wait for that treasury to come down. Got to wait for the market conditions to get better. In May, we still have that whole Federal Reserve, hopefully giving us another interest rate cut. So again, I really think that will position REITs for a great year. If we don't have a recession, or even if it's a mild recession, or maybe we're in a recession now and we just don't know it, and that comes to pass and everything is, fine in 90 to 180 days, then REITs are going to have just a blowout year this year. So I'm of that camp, and I'm just patiently waiting because I've been in a bear market with REITs for about 3 years now. So it's about time that I have my time. So, all right, guys, I've been blabbering on for about a whole hour here. Let me just check the comments, and then I'm going to close out the stream. So let's see. It's a Wealthy Life says, I've been adding for years into FS. Oh, that's a Fidelity fund. I forget which one that is. I have like 20,000 in it, getting 1,000 a year in dividend. Oh, that's the real estate fund, if I remember correctly. Thoughts on this one? FSRNX. So yeah, I mean, it's just it's a cookie cutter real estate index ETF. Probably no different than V&Q. I haven't really looked at that Fidelity fund in quite some time, but I believe I recall that one. Let's see. We have Income Baron saying people stick with Roundhill because of the weekly payday, but Neos is better. Yeah, I mean, that's probably true. That's one way to look at it. I like, it's not even the weekly pay that I like, at least not for the NVIDIA or the PLTW one, right? Because I was looking for a product. I could have went with yieldmax, right? I could have went with NVIDIA and I could have went with plty, but I just don't like yieldmax. I don't like the idea of being capped on my upside or capped on my gains. So that is why I went with NVW and with PLTW over the yieldmax variants. If Curve had an NVIDIA cover call ETF, I would have went with Curve 100%. I wouldn't even have second guessed it. I would have just went straight with Curve because I really do like Curve. I just don't like that they don't have, you know, a variety of stuff. But you know, what was this? Howard Chan, I think that's the manager, the fund manager. You know, he's on record for saying that he wants to just focus on a couple different funds. He doesn't want to have like hundreds and hundreds of funds like some of these other places do, because then, you know, it just kind of dilutes their expertise. So if they do come out with an NVIDIA one, I would definitely probably consider that over NVW. I don't know if I would cash out of NVW, but, you know, it'd be a strong second place for sure. The extra pay is just, you know, it's nice. It's a nice add-on for sure. It's a nice add-on. Let's see. It's a Wealthy Life says Soxel's decaying every day, not a hold. You time it. Yeah, that's the other thing I heard about these leverage ETFs is that for leverage ETFs, there's this thing called theta decay. Don't quote me on any of this. This is just what I read off of I forget where I read. I think it was probably Reddit. But yes, leveraged ETFs over the long term, they have something called theta decay. And it's basically you're losing your return during that time, right? It's time decay. So I don't know what any of that means, but I know that like if you were to hold like something like the actual like ETF that it's copying, which is SOX, I forget the full ticker. I think it's SOX or SOXX. But if you just hold that ETF, that's like a, you know, 1-for-1 versus if you're holding something like the 3X levered product, there's going to be this decay in returns. So you guys make of it what you make of it. You know, don't quote me on any of this. It's just some stuff I read and I never really looked into it. And again, I wouldn't hold a 3X levered ETF for the long term. Definitely not the long term. Let's see. Sell that bad boy at 24. Hopefully, let's see. I hope it gets there. Senpai says strategies over spreadsheets every day of the week, man. Was it profits over screenshots? I took a freaking screenshot and then lost a profit, and I'm still pissed off about that. And this is with Soxel, right? So I was up like, I think $2,600 when we had that huge spike on Monday. I took the screenshot and I'm like, I'm riding this thing all the way out. Then I went to dinner, turned off my phone, stopped checking it. I checked back and I was like down to $1,200. I was so pissed at myself. You know, like I should have sold at that moment, but whatever. You live and learn, right? Sauce, hey, welcome back, brother. Welcome back. And appreciate again the sauces you sent over. They love it. Absolutely, they love it. All right, so really, really do appreciate that. Guys, if you guys are into hot sauces, you guys need to check out Sauce Maker. Sauce, you could throw your link in there if you don't mind, man. Like people, if you like hot sauce, you need to get connected with this guy. Let's see. They decay because they are using options to get the leverage. Okay. All right. Well, I mean, I guess that makes sense. Perfect sense, I suppose. But guys, that's going to do it for me. I've been blabbering on enough. And again, Sauce, please, you can put a comment in the stream at the end of the stream, or put a comment down below. It doesn't have to be in chat, but yeah, if you feel comfortable with it, you know, put your link out there. I'll definitely promote it. I have no problems with that. But anyways, guys, I'm going to call it. I got to get ready for the gym. Got to get my day started here. I hope you guys have a wonderful evening wherever you're at in the world. And as always, I will see you guys in the next stream. You guys take care.